In this week's IPO Watch series, we're going to be covering Synergy House Berhad. As a quick disclaimer, guys, we do not own any shares in Synergy Berhad. It's still under application phase. And as another disclaimer, this is not financial advice. It is purely educational. Okay, guys, it's that time of the month again, and we're going to be covering a deep dive on Timecom and PPHB. And you can get the 20% discount, which is before 15th of May. Make sure to check it out. The links will be in the description and comments down below, where we'll be talking about the fundamentals of both of these companies. And just to tease you a little bit, we own one of these company in FIRL Pro. So make sure you check it out. The links are both in the description and comments. Okay, MJ, another day, another IPO company.
Yeah, we have to push this. We're back with the IPO stuff again.
Yes, exactly.
I just saw our latest videos, right? 3 out of 4 IPOs.
Yeah, exactly.
Now 4 out of 5. So.
I mean, if you look at the Bursa website list, right? I mean, it's still gonna be a lot more.
Yeah, people are saying Bursa Malaysia is not vibrant or whatever, but
yeah, exactly. And if you're gonna watch this video, right, you are still in the before the application phase, which is still pretty good, so that you can know more about Synergy House Berhad from our videos.
We try to do it as early as possible, but sometimes they announce it so close, and then they give you a week, and then we're like, oh, okay, then we need at least a couple of days, maybe 3 days to study it, and 1 day to film, 1 day to edit, and that's why only 2 days left for this company, Synergy.
Yes, exactly. Okay, so I think in this video, you're going to be learning a lot about Synergy.
Yeah.
And what you learn is basically the IPO details, what is their business, what do they do, and whether is it worth subscribing. So you want to watch this video until the end. Right, so the first one, it is definitely...
Yeah, so this is the administrative stuff, right?
Yes.
It's boring stuff, but you gotta know it. 18th May is the closing. Usually it's at 5 p.m.
Yes.
You guys can log into your bank accounts.
If you are a direct account,
correct.
then you can subscribe it yourself. If you are nominee, I think you need to ask your broker how to subscribe to that.
Yeah, so they're offering 5% to the Malaysian public, which is in line pretty much with the average. Some companies, I look back the past 10 companies that was listed, only I believe 3 were not 5%.
Oh.
2 were lower, 1 was higher, something like that.
So
the higher one was, I can't remember, at 8%, might be DXN actually.
Oh, okay, that's cool. So does that mean that the lower it is, the more valuable that company is?
Potentially. I'm not too sure how they calculate. Sometimes it's also they want to give to other shareholders.
Yeah.
So for those who don't know, you see this Malaysian public, you think it's 5%. If you are not a Bumiputra, it's 2.5%. So they usually split it up into 2. And then of course, then they have eligible persons, right? So these are special people. And this one is 2.5%. Some can be a lot higher. Then you have institutional, etc., etc. So there's a lot of things that go into why 5%, why not 5%. But basically, it is what it is.
Okay.
So it will be about 215 million market cap once it lists at 43 cents, and they plan to raise around 34 million. So that's just a bunch of facts for you guys. They have a very simple shareholding, but essentially after listing, SH Holdings, which is owned by the two, they're not co-founders, but they're the 2 leaders in the space.
They take over, is it?
Yeah, so Mr. Tan is the son of the original company. It wasn't called Synergy. I cannot remember the name really.
Right.
But he's the son. And then both of them went to the same university. And then after Mr. Tan joined his dad, a couple of years later, then Mr. Tay joined him. So anyway, they both own 50% a piece of SH Holding, which will own 75%, nearly 75% or 3/3 of the company upon listing.
Okay.
So it's still a tight control.
Yes, it's a lot of skin in the game.
Yeah. So what do? They do this thing called RTA, basically IKEA, a bit like that, right? Ready to assemble. So you buy this stuff, and you fix it yourself. Which means that a lot of their businesses actually come from Western countries.
Yes.
This is a very Western thing. I don't like to make my own table.
Yes.
Unless it's a fun project. But if can, I will get someone to
assemble it for you.
Assemble it for me. It's cheap, right? Labor is not cheap in these other countries, so that's why they assemble themselves. So yeah, so that's what they do. So they're B2B. So this will be they'll sell it to wholesale retailers, the usual stuff.
Right.
Harvey Norman, like I'll show you the customer list later on.
Okay.
But Harvey Norman like customers. And very recently in 2019, they go deep into e-commerce. So they have their own website. And then they're also on Shopee, Lazada, Amazon, things like that. I'm not sure Shopee, sorry. But Lazada and Amazon, yes.
Right. And I also noticed that they kind of do a lot of value-added services. So they deliver the product.
Yeah.
And they also help to assemble the product.
Yes, they do. They do.
Okay.
Yeah.
That's pretty impressive.
So yeah, some of the products. I got this off their website. Yeah, pretty basic stuff. Looks their design is a little bit more modern. So appeals to that kind of crowd. Apart from that standout, I didn't see much beyond what's ultra unique. Then again, that's true for most
Furniture companies.
furniture guys anyways. So that's great. They do have something special which I'll talk about later on. So as you can see, majority of their business comes from UK or US. So 42% UK, 39% the US. In fact, Malaysia is quite tiny. Even the UAE is more.
Yeah, it's a very typical industry lah. I mean, it's always the sales is always coming from Western countries.
Yeah.
Yeah. So
I'm not quite sure why. I think, actually that's a question I never understood, but there you go. So B2B still takes up about 75% of the revenue. However, if you consider the fact that they started their e-commerce B2C, right? In 2019, 4 years now, they're already at 25, almost 26%.
Oh, it's growing very rapidly. It's
and
like
it's the US is the big one.
It's like from 1.9, I think it's up around more than 30 times in just a span of 3 years.
Yeah, exactly. So you can see, right? 1.161.
Yeah.
And then now it's 38.
Wow.
39,000. So they're really riding the US wave, Hey guys, if you're interested in building a 6 to 7 figure portfolio using the power of stock investing, head over to the comment section or the description to sign up for our free masterclass so that we share with you exactly how we do it. So this is a bit of a breakdown of what they do. So bedroom stuff is number 1, 2/3. Living room stuff is almost 1/3. And dining room. So I guess this is their specialization. So that's why you can see their products,
Yeah, it's all
You don't see
big
much
rooms.
kitchen tables or tabletops or cabinets,
Yeah.
kitchen cabinets, stuff like that. So that's their specialty. So you see here are their major customers. They didn't want to mention, but Hillsdale Furniture, Shop Direct. Yeah, you can pause the video and Google all of them, see what they do.
Yeah, they all each contribute about 10%, 19%, 17, 16.
Yep.
Even. All right. Okay.
Yep, correct. And so you can see some are e-commerce. They did mention C Group. I cannot remember the name, but it's in the prospectus.
Okay.
Hillsdale, this is the wholesaler. And then this Shop Direct Online, this is their third-party e-commerce site. So they don't just go to the big ones, but also, depending on the context, right? So this is the business model. So the unique part about them is that they completely outsource to third party when it comes to manufacturing. So they just focus on the design and development. of the thing.
Wow, then I assume since they're doing a lot of design and everything, their margin should be much
Pretty
higher.
decent. You see the numbers later on. Let's see what else. Yeah, so it's a relatively simple business model, right? They don't make the stuff. They just get someone to make the stuff. I think they made that transition in 2004. So about 8 years after Mr. Tan came back and took over from the dad, he was like, yeah, no, now it's we're gonna go very low it's not zero manufacturing. They still keep some machineries, but basically that was the strategy. Paying off. So what are you gonna do with the money? So it's mainly for fulfillment centers. Right now here they state that they are going to just purchase inventories. So it's just to expand capacity, to tell all these other wholesalers, B2B guys, that hey, we have more capacity, so give us more business, essentially. And one that I didn't put here is that they do plan to build their own warehouse, I think in Selangor. So but it's not listed here because they're going to fund it internally, so they do not need the IPO proceeds to do it.
That's good.
Sorry, I did put it here. So one of the things going forward is like some of their future plans, right? Right now they got 98, third-party e-commerce fulfillment centers. 98.
Right? There's a lot.
In overseas, here, this stuff like that. Mainly overseas. So this is confusing. So eventually they do want to build one themselves so that they can kind of centralize most of their stuff, right, in just 2 warehouses. The commencement this year for Muar, and then 2027 will be for Port Klang. But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description. The team, this is Mr. Tan, graduated from the US, so no surprise, seems like he has contacts and whatnot there. He came back, he straight away started helping the dad, and then eventually he managed to buy over Synergy House from a lot of the other shareholders, which were mainly his family members. Other family members, right? So, Mr. Tay also studied in the same uni as Mr. Tan. He when he first got a job, he went to this place called Yonglong Sports for about a year, and then after that, he decided to join the company mainly for marketing and like gaining new customers and things like business development.
And basically. You mentioned that they both met each other in university.
Yeah, I believe so, because they're in the same university then.
Alright. Yeah, most likely.
I don't know whether they say it. I think they didn't say, we met in university and things like that, but
it was in the same university. Okay, that's true. Okay, this is the history. I believe just now you also kind of already hinted a lot of things, right? That both of these team expanded to this business, the design business.
But they were still into manufacturing and all that. It's just for the first 8 years, give or take. No, maybe 7 years, sorry. So they focus on wood panels. This is interesting because solid wood is harder to get because you need to get it from natural forest.
Yes.
So they have this thing called supply constraint. And the second thing is, as urbanization grows, right, the demand for these products will increase. And apparently, wood panels are a lot more suitable for like smaller condos, things like that, rather than big solid woods and all that. So that they already saw it back then, and that's why they decided to pivot the business into
that's very visionary
and things like that. But of course, the biggest visionary move you can say was that they decided to create their own brand, because last time they were OEMs, right, in a way. They just do it for other people. They create their own brand and decide to say, hey, we'll fully outsource the manufacturing. I'm quite sure it's because they just don't like doing the manufacturing.
Yeah. I mean, it's also a low margin business. Lots of work.
Yeah, exactly. So they manufacture to 57 third-party manufacturers in total. 2011, they started Tomato Kids. I think some parents might know this. This is the kid version.
That's actually a very interesting name.
Yeah, Tomato Kids.
Tomato Kids.
Their website is called Synergy Tomato. So interesting. 2019 e-commerce, and then 2020. So it's interesting. Then they created their own brand. Then 2020, to get into the US, they started using other people's brand. This is a bit like a reverse kind of thing, right? So, but it makes sense because they're getting to a new market.
Yeah, trying to tap on a new geographical market. So definitely need to use a third party's brand name.
Yeah. So there's that. Otherwise, they probably can't get a foothold. I mean, marketing is so difficult.
Yeah, I mean, Tomato Kids, man. Tomato Kids. Yeah. Okay, this is the interesting part, which is the numbers.
So yeah, you can calculate the gross profits. So you're looking at 25%. It's pretty decent. And if you look at the profit margins, you're looking at, what is that? 10%?
Yes, around that.
16 divided by 200?
More or less.
Right?
Or less than
8%.
that.
About 8%. Okay, is decent, I guess, for the industry. Sales profit up. Sales and gross profits up a lot. And, profits, they all look great. Now, I did notice one thing for the cash flow statement, which is not here yet, but you can see that the picture is not as good.
It's very inconsistent.
Yeah, it's not as good, which is quite in line with the industry. The other furniture guys in Malaysia. I'm not saying that they are like for like, but
I believe in these numbers is more of 2020 and 2021. So I think it should be like lockdown, MCO period. Maybe.
Yeah, correct.
Maybe it's because
so it's still not too bad, but pre-pandemic and now difference is not too big.
Yeah.
So we'll see. But the biggest thing that I managed to catch is this. So 2020 is the COVID year, right?
Yes.
And
they pay a lot dividends.
Yeah. This is the biggest dividend that they reported. And then also they added on more debt. Right? They draw down their revolving, which makes sense, because it's suffering. But then they paid 13 million. So
yeah, it's quite fishy lah. It sounds like
I'm not sure. I'm not sure what's up. I'm not sure what's going on
it
there.
Sounds like the shareholders are desperate for money.
Potentially. Yeah. So anyway, just to summarize all this, right? What do I think is good about the company? I think their move to not rely on manufacturing is great, because I would assume that in the furniture industry, there are a lot more manufacturers than brand owners. So as a matter of business, let's give an example of our business, right, that we're doing here now, right? If we were to become, in the investment field, if you were to become an analyst, many analysts, not as many creators. So that's why we prefer being creators. We like analyst work, but
yeah, there must be a balance.
Yeah. Or no, actually, we want an imbalance.
Yeah.
We want to be the part where it tilts in our favor, right? As a business structure, right? It's like, so here there's not as many brand owners, or at least I think there's not as many, and there are a lot more manufacturers.
And also another one is USD revenue.
Yeah. So
actually it's quite typical. It's the same as other furniture companies.
Two big risks is I didn't mention the obvious ones like competition. I think that's very clear. Everyone knows, in the furniture space is highly competitive, and it's like, why would I pick that over? Like IKEA is the only company that I know of that has some sort of mode.
Okay.
Right, where I don't know, it's branding. Is it that they really make it so easy that you can?
It's definitely it's branding, because it's visible to everybody's eye lah. Like when you go out, you just see that a very huge label IKEA.
And then also, they do plan out their stores. Like when you walk in, right, you have to. They want you to walk a certain way, so that you will go past all
everything. Yes.
They have this whole system. Of course, the meatballs.
And then the place where you take pictures, for Instagram.
Yeah. So like they have this whole thing going on, which makes them very different. Apart from that, really I can't tell. But the two less known risk is a 50% shareholding. So they do control a big chunk of the business already, but within the chunk that they control is split down the middle. So if people do not see eye to eye, there's going to be a problem. Of course, one would like to think that presumably they've known each other since their college days. Maybe they were dorm mates, who knows?
Right, but I'm surprised that they didn't put like 51 or 49, 51, 49.
Yeah, there you go.
Yeah.
So, So that's why it's a bit of an issue to me. And then, of course, 95%, I didn't put the full stats here, but 95% of their sales are still third-party brands, actually. So the idea that they have their own brand is correct, but a big majority still are third-party.
I think it's a
related.
slowly one, trying to touch.
So valuation, I didn't put the balance sheet stuff here, but basically their net debt, almost 36 million. Approximately enterprise value 250 million. So that's about 15 times earnings on 16.6 million of earnings.
Right.
Furniture average is actually less than that. I skimmed through it, over 20, nearly 25 furniture companies in Malaysia. A lot of them, I would say a third probably are loss making, and then there's probably another third that is less than 15, 8, 6, 10, that kind.
Yep.
And then there's, actually I would say 50, probably 50% actually less than 15. And then the other remainder percentage is about, the highest I saw is like 80, 22.
Okay.
But this one probably earnings have dropped a lot, that's why. So
which is quite fair around the industry's benchmark.
Yeah,
like right in the middle.
Maybe slightly higher, but maybe they justify it because of their whole, manufacturing outsource.
The design concept and everything.
Yeah.
Okay.
So that's why. And yeah, that's pretty much it. It's a relatively straightforward business. Over to you.
Yeah. Okay. So if you think whether this is attractive to you, I wouldn't suggest you guys to straight away just subscribe to it. Read more on their prospectus. There's a lot of information and data that we may not have highlighted over here, but make sure to read them so that you know more about Synergy. And before you guys go, this is our FIRL Pro performance for April, and it has been pretty decent at the moment. It's not really if you look at the amounts of greens, it's more than the reds right now, and we are standing around 8% returns for this month. And if you look at the bottom one, which is the Telegram portfolio, this portfolio is more of a short-term catalyst, which is not on FIRL Pro. So it's a very time-sensitive portfolio because sometimes the catalyst may not be there in the next maybe even 5 months or 6 months. So it's a very crucial thing, and we will share with our members immediately on Telegram so that you will know which is our watch list. And if you want more information on FIRL Pro, you can actually get our free sample, and you can get the links are all in the description and comments. So guys, if you enjoy this IPO watch series, make sure to comment down below what do you enjoy the most. Also, make sure to like and subscribe for more of this sort of content, and we'll see you in the next video.
Peace.